And he was pitching both Citi, among other stocks, both Citi and JP Morgan. And since that time, Citigroup's down 95% and JP Morgan's down, I think, 20%. So in other words, not all big banks got killed. The big banks that had someone running them that was focused on risk and kept them out of the riskiest things actually hung in there pretty well. It's sort of remarkable that almost unique among the big banks, JP Morgan, thanks to Jamie Dimon, I think, seeing the trouble coming and positioning the bank differently, was able to weather such a severe storm.
You bought warrants in the banks
Well,
years back?
Actually, just recently, we currently own TARP warrants, which is a very interesting security. They're hard to buy in size if you're big institutional investors. I think one of the reasons they're cheap. But as part of the TARP investments that banks were forced to take in some cases, when banks repaid the money, the government got these long-dated securities. So I think in the case of JP Morgan, it's dated 2018, so you got 7 years. And they're a bit out of the money. I think it's a $43 strike in the case of JP Morgan. So you're sort of buying a very long-dated, moderately, not crazy, out-of-the-money call option. And you know, when we think about where we think this bank will be over a 7-year period, it's a very attractive, very leveraged way to take a position, and you can tie up a lot less capital if you're wrong. You lose less capital, but you still have all the upside if you're right.
So you've done that with both Citi and Morgan? Or
not with Citi. I'm trying to remember which of the big financials have those TARP warrants. I know Wells Fargo does. I believe Goldman retired those warrants, if I recall correctly. The two I know we own right now are Wells Fargo and JP Morgan.
And Italian bonds? Would you buy Italian bonds?
Not in a million years. I mean, people talk about how, oh, the interest rate's gotten up to 7% and that's going to bankrupt Italy. I mean, if you forced me to hold them, if you said you can buy them, but you have to hold them for 2 or 3 years or something like that, I wouldn't buy them if they're yielding 20%. I don't actually think Italy's going to default, but there's a high in I mean 7% for something where you're really taking catastrophe risk, not to mention inflation risk. I think anyone buying U.S. 10-year treasuries yielding 2% is certifiably insane, given the printing presses are running, and the U.S. isn't going to default, but with inflation actually starting to pick up, yeah, that's a terrible investment relative to many other more attractive investment like blue chip stocks, in my opinion.
Is it 2% because it's a default position? Why would anyone buy it voluntarily?
Yeah, well, it's I think as a safe place to park cash, treasuries are short-term treasuries are a reasonable place. I think I scratch my head at the low interest rates investors are willing to accept, for a 10-year or 30-year treasuries. I think what explains this market inefficiency, given I think it's crazy, my best guess is that the large institutional money of the world is managed by people who it's not their own money. And they're evaluated based on monthly or quarterly or certainly once a year performance. And the way, if your alternative is you can only buy stocks and bonds, so your alternative to treasuries is riskier bonds, well, that could cost you your job. Or stocks, which are yo-yoing around like crazy. There's a lot of short-term volatility. Well, that could cost you your job as well. So what do? You retreat into the default safest investment out there, U.S. Treasuries. So it's actually logical when viewed from the career standpoint of the people making the money allocation. It's just sort of insane if you're a retiree or that it's a pool of capital that's going to pay out your retirement or health care benefits in 20, 30 years, earning 2% in a currency where there's likely to be inflation greater than 2%. That's insane.
How much of it do you think is central bank owned? Just
I'm not really, I mean, my understanding is China's bought a bunch of it over the years, and they have another structural reason. They're not really buying it as an investment. They have a huge trade surplus with us. They got to park it somewhere to sort of buy up dollars. There are some structural inefficiencies, but for an investor with free will, you can today, the choice between buying 10-year treasuries, where you're likely to get a negative real return, versus right now there are 4 companies in the